All right, what's going on? Been a busy day of uploading videos, so I really hope to be adding some value with what I've added to the channel today for my uploads. This will be a review of last week's price action as well as, the outlook, right, for this week here that has just begun. It is currently Sunday already. The markets are open and moving. So let's just dive right into it. Of course, again, this is not financial advice. This is entertainment and educational only. My perspective on the things that I've come across while learning about these markets, right? So let's tap into that economic calendar. And so what we see from last week, Tuesday, Fed Chair Powell testified. So it was interviewed by Congress. The following day, Wednesday of NFP week, there's always that ADP non-farm employment change. And then Fed Chair Powell testified again in front of Congress. Had that Joe Stop openings, 10-year bond auction. And then Thursday, unemployment claims. And then Friday, the actual, non-farm employment change, right? So that was the events last week on the horizon, which I believe whenever I see a bunch of orange and red folders, I say that may be a busy week. And we'll dive into the charts and see what actually happened. So just gonna keep this short and sweet, right? Because the outlook last week was simply just about Dow Jones. So we'll just start there. And the one level, if you can call, and one thing I want to just put out there now, if you are someone that's been keeping up with the exact price points that I've been giving out, when you're using the futures contracts, they have a quarterly rollover, if you will, meaning that from like December to March, there's a certain data feed you'll use. Then once that expires, right, you switch over to the next 3 month period. And then once that expires, right, the next 3 month period. And then once that expires, the next 3 month period. So it's 4 3 month periods, which is basically right broken down into quarters, in which you're going to have to remember if you're using an actual, that segmented one. And let me just show you, for example, right? So I like to use a continuous contract, which is what I'm showing here now. This will be represented by the symbol YM1 exclamation mark. But as you can see under here, YMM2023, this is what I'm talking about as far as the contracts roll over. So this is the upcoming 3 month period, which officially is going to kick into action at the end of this week. But the reason why I switched over early, and let me show you why, when I go to YMH2023, you'll see that this is also the Dow Jones chart, but you see that the prices are different. You see that this price is currently at 32,221. And when you're looking over here, you see this was at 32,400, while this is also at 32,400 something. So like the continuous contract has to be just simply adjusted. If you notice, let me just show you real quick down here. While I'm on this, this is the March contract. The YMH is a March contract. YMM is the June contract. But so while you're in here, down here, just notice with the options, right? When I switch back over to the continuous contract, you see how it says it's B adjust, and now it says what says B dash ADJ. It says adjust for contract changes. So when a contract changes over, I can automatically just have this adjusted as far as the candles being able to look as they were in correlation with the way that they actually traded in the last contract. Because for whatever reason, once the contract shift, a lot of times the prices also shift. And so that was very confusing for me at first when I first started using the futures contracts. And I still don't by any means know everything there is to know. But the one thing that keeps me using these contracts, even though you may think like, dude, that's kind of confusing. Why would you want to use these? And I already spoke about how this shows these opening gaps in a sense, right? Whereas the CFD data feeds that most traders are using, those are actually trying to keep up with the futures contract, not vice versa. And so, although there are some complications across the board with everything that has to do with this, from my experience, right, I've noticed that it's more beneficial to have as close to the actual price point that institutions are going to be referencing, as opposed to just taking a shortcut using those CFD charts, which don't have to, right, be adjusted or rolled over, but they don't show you the actual market structure in a sense, right? Like those gaps, which are important. Gaps happen, they're a real thing, and I'd rather be aware of them than not, right? And so moving on. So here we are. The main thing is that again, the candlesticks and the levels are going to be the same. So the one main level I recall that I had identified last week was the low of this candle here. This up close candle. I was see because this was Friday, right? So coming into the week with my outlook and the market already opened up, but it was still around here. This was an objective to the upside. And so, as you can see, Monday we traded up into there, rejected, closed lower. Tuesday couldn't quite get back up to there, and then we're off to the races lower, right? Tuesday kicked off with Powell speaking. Wednesday didn't do too much, and then with that unemployment claims on Thursday, we saw a nice run lower. We finally started to take out more within this consolidation. We actually took out November's low finally, which I was looking for to be taken out since December 13th. But just going into the hourly chart to just show how that played out. This is supposed to be sinking. Oh, okay. Maybe just can't see it because it's too high. No, I'm confused. Okay, well, let me flip the script then because this is supposed to be sinking to every layout. So I'll just put the daily chart over here and I'll put the 60-minute over here. Let's see if that works like that. But so no, it's not. Why is that? Why is that? Why are we not getting the layout synced? It's supposed to be syncing symbol, crosshair time. Let's say drawings, but pretty sure I have it set to do that. You know what it might be? It could just be that it's not set to show on those time frames. So actually, I'm gonna take this back to the hourly, how I had it set up. I'm gonna go back to the daily here real quick. And then what I'm gonna do is I'm gonna make sure that is set to be shown on the other time frames. There we go. So that was my mistake. Yeah, so going into last week, and you've already seen me mark up my daily dividers, the opening gaps, things like that. So to make these a little bit shorter, I won't constantly repeat doing those things. The whole goal here is progression, right? Just to give you a little inside peek of my perspective, the way I do things. And then, if you find something useful, you can start to incorporate that into what you're doing, because there are a lot of things that a trader is thinking about. It's not always easy to speak on those things real time, right? Especially when you're trying to, analyze live data and such. But so the week began with this candle here. That was the first candle of last week. And I believe, like I said, it was somewhere in this area where I was pointing up to here as a potential draw on liquidity. Once it got up there, you see on Monday, I had no willingness to trade back up to that level. We're going to the exact hour in which Powell began his interview. and we saw an immediate drop off in the marketplace. Wednesday, he spoke again, but as you can see, Wednesday was mostly consolidation, right? We had a slight dip on his initial, opening of his interview, a little bit of follow through, consolidation, ran up one more time to run a buy side above these highs. And then on Thursday with the unemployment claims, right, we got aggressive again lower. Friday, we drift higher. Basically, in my opinion, I would say this was engineering sell side below these lows as it ran higher and also refilling and efficiency up here, trade into this inefficiency. And then Friday around that same time, right? That theme was 10, 11 o'clock. We were getting aggressive last week. Another aggressive drop off. And then that made the low of the week before we were traced back into this range, right here. And already this week, since opening, this is the first candle this week. You see we got very aggressive. I actually want to just go into the economic calendar again for this week. And what actually happened was there was a bank, Silicon Valley Bank, actually was having some troubles. And now it's been a big talk over the weekend since Friday. A lot of people were just wondering what will happen, the banking system possibly being in jeopardy and things like that, right? So they added this announcement to the economic calendar. You see that says release time comes as a surprise from source. Event added to calendar at release time. So once this was already determined that they were going to do what they did, then they went ahead and added it to the calendar. But like I said, it was not there prior. Usually on Sundays, you're not getting high impact news. But if you notice within the charts, all of that explosive volatility, right, that was the result of this. And what do we have coming up? Monday, nothing. Tuesday, we have CPI. So if you recall, I've done a live commentary on CPI. CPI can get very explosive with the conditions we're in now. Inflation is a hot topic. Following that, we have PPI. So the very next day, what I was noticing before, there was at least like a day in between, but we have a back-to-back this time. Thursday, unemployment claims again. And then Friday, we also have a high and medium impact news release coming out. So again, a very busy week, and we've already, right, started off busy. I mean, just looking at, my God, it opened up around 32,300, traded as low as, let's say 32,100, so dropped down 200 points, made a high about 350 points above where it opened at, and now it's just within that range, but basically filling in the imbalance of this wick. We've already traded above the halfway point of it and gotten it closed, so I would not be surprised if continued higher prices were the case, but just not with this much volatility chopping around like it is now until we get into like London or tomorrow morning, where we'll expect some more volatility into the marketplace. Even though there's no high impact news, just by default, that 9:30 equities open tends to see, price get a little bit busy. And so as far as an outlook for the upcoming week, right, just looking at the daily chart, seeing how we basically have not taken out this Tuesday, December 13th high, although we were trading higher back to it. And now we've taken out, right, December's low again and November's low. So my interest is really in this area, the inefficiencies here. I like the fact that we have opened up bullish to give it some breathing room, possibly trade into this inefficiency here for the week. So let me just put a box there so that, right, we have a visual representation of that. Let me get us back in full screen too. And so trading back into this inefficiency above Friday's high, I'm going to be looking for reasons to find a short setup here to take this marketplace. Well, first of all, back down to, right, Friday's low. That'll be the first target. But then there's a lot of inefficiencies here on the daily chart. I have, no measurement, if you will, of how far lower I would anticipate it going. Just going to take it one day at a time, right? But once you get into these types of environments where Dow Jones is very volatile, creating daily candles of, 300 plus points, right? Just taking out the previous day's low will be plenty, as far as like if that's maybe the first partial or the second partial and then just waiting for more information and then looking for another setup the following day. Because I'm really just, a day trader. I don't care to hold my trades for too long, except for the fact that it is nothing wrong with being in a trade from up here and having the patience to be able to hold it until it did finally take out November's low, because this was, I believe, one of my first few videos where I was in trade up here targeting this low, but I just don't have the patience to be in all of this nonsense here. So that trade had long been closed, but I am, like I said, still in development. Those are things I do want to take advantage of to be the best that I can be, right? I don't see a reason why I can't. And so I do want to just briefly just show the dollar chart real quick. All right, daily chart. So we were looking for the dollar chart to reach this buy side liquidity, which it did last week, and also trade into this area. I mean, pretty much perfectly. It did wick just above it, but as you can see, this was last week. So we started down here. We got explosive on Tuesday with Powell speaking. Wednesday, we saw that push up there, right? We closed bearish though. And then Thursday with those unemployment claims, for whatever reason, everything was pretty much trading lower. So you see dollar trade lower on Thursday as well on Friday. And as you can see, we've opened up this week very aggressively lower. This low is of a lot of interest, and that's why I still have it marked up. And then just going down to the 30-minute, a little bit more details, right? Those daily dividers, those weekly opening gaps marked up and such. We already have, right, this week's weekly open gap marked up with that midpoint. So that 104.406 level is going to be of much interest to me. How does price respond if it's able to trade up there? Does it show a willingness to get through that? This is another weekly opening gap, that green dash line, right? Again, that's that monthly midpoint of a wick. So a lot of areas of potential resistance up here. We want to see how it trades through that to basically give us that confluence that we'll see continual lower prices in the U.S. stock index futures. And so with that, I believe we're done with this video. Thanks for tuning in. If you felt like you learned something, leave your boy a like. But if you got any questions, comments, or concerns, hit that comment section. I'll be sure to get back to you. Peace.